the minute you control your income is the game changer. And I think that's the biggest thing right now, like especially right now, because everything's, like Michael said, coming at you. Like, and it's getting passed on to the average consumer, right? Like gas prices, utilities, food prices, like everything. And when that average consumer, their income isn't increasing, like it is really, really big crunch time. So if you can control that, I mean, this is the best time, and you can have a tangible way to do it that, you can just repeat and compound. That's why you want to really get into it now.
Hey, what's up, y'all? We've got a great video ahead for you today, so be sure to stick all the way through to the end. There's so much going on in the global economy. It's really tough to keep track of everything. We talk about real estate investing often here on the channel. Today is going to be a real estate investing based video. With so much uncertainty, investors are out there, where do I deploy my capital right now? Am I looking at short term? We're advocating long-term investment plays, long-term buy and holds. And my favorite investment class right now, and there's a huge buzz around it, is going to be the short-term rental space, or the STRs. So I'm active in the STR market. Matthew is often here on the channel as well, talking about his STR portfolio. And it's an exciting investment class, guys. Some people are looking at it though, and they're saying, there's a lot of opportunities out here in the market right now. I know enough to know that I shouldn't go alone. And I'm going to go ahead and second that, guys. It's no time to get cute. Now, there's going to be a lot of opportunities. They're going to be coming up here in the real estate market. But if you're not an expert, make sure that you're either following experts or attaching yourself to them, because this is going to be, although filled with opportunity, it's also going to be a very dangerous time to navigate alone if you don't know what you're doing. So we're going to encourage coaching, obviously following a proven blueprint, which leads us to our video here today. So guys, on your behalf, we often go out there and find folks that we can present to the channel. They're going to be, great business opportunities, and they're not going to be for everyone. Some of y'all may have no interest in short-term rentals. Those of you that do, though, that are looking to get into the space, but maybe don't necessarily have the capital or the cash or the capital or the credit to go out there and pick up your own properties, here's a way that you can get involved in the space by leveraging someone else's ownership on those properties through an arbitrage and a partnership model. So guys, excited to have them back. We have them back because they continue to perform. Time and time again, we're getting tremendous feedback from our audience that have moved forward with them, that are making money hand over fist right now. So without further ado, we will bring on Michael and Katrina from BNB Bootcamp. Welcome back, guys. It's been a while.
Thanks so much for having us again, Michael. It's really good to see you.
Yeah, we really appreciate it. Always a great chat with you, and just like-minded people. And also, I know you guys are doing short-term rentals. We're doing short-term rentals, and it's just really great to see people that are coming into the space that are serious about doing this as well.
Yeah, fantastic. Love having you guys on here. And again, we cannot emphasize enough the results that we're seeing time and time again. So thank you for all that you guys are doing for not only our channel members, but from folks all over the place that are working directly with you guys in this capacity. So we love this video, this episode today. It is, why is this the best time? Why is now the best time with all this uncertainty out there? Why is now the best time to get into STRs?
Well, I think a number of reasons, but I'd say the biggest one, and let's just take short-term rentals and put it over to the side here for a moment. Let's talk about kind of a bigger issue I think is really driving a lot of people's worry, concerns, and fears. Because look, you don't have to look hard to find negative, bad news of what's going on out there. Inflation is raging. Cost of living is going way up.
Housing market's crashing right now everywhere.
Starting to correct, yeah. Rents are going up. Like it's hitting the average guy or gal at every single angle, right? So why is it the best time ever to get into STRs? Well, I'd say the biggest reason is because if you don't have control over your own income, you are putting yourself in a very vulnerable position financially. Because based on what the government says, inflation's over 9%, which we all kind of know.
That's what the government's saying.
We all kind of know that's kind of a BS number anyway.
9.1%.
Yeah.
It's much higher. Yes.
It's actually, if you've actually tried to buy anything, we know that's not reality, right?
Have you ever tried buying an avocado recently?
I did.
Like it's nuts out there.
It's nuts.
Why is it good to get into short-term rentals? Because it gives you the opportunity and ability to have more control over your income. And we always say to people in this business that are either in it or looking to come into it, if you're ever unsatisfied with the amount of money that you're making, all you have to do is simply go look at yourself in the mirror and decide, how many times do I want to go out and repeat a proven process to go get another property in my portfolio to grow my income on a monthly basis?
Yeah. The minute you control your income is the game changer. And I think that's the biggest thing right now, like, especially right now, because everything's, like Michael said, coming at you. Like, and it's getting passed on to the average consumer, right? Like gas prices, utilities, food prices, like everything. And when that average consumer, their income isn't increasing, like, it is really, really big crunch time. So if you can control that, I mean, this is the best time, and you can have a tangible way to do it that, you know, you can just repeat and compound. That's why you want to really get into it now.
Love that. Love that. Now, you guys were talking about rent. Now, with it being just record highs right now, part of your, or a big component of your model is going to be your partnership. If you guys, for those of you that have not seen them, we're going to go ahead and drop that playlist. But if you could talk about briefly your partnership model, and then how is that being affected right now with these record high rents? Are you guys running into snags with trying to get homeowners to work with you guys in that capacity right now?
It's a fantastic question. I'm glad you brought it up, because we're happy, and we're going to go on record saying that, I mean, if you do any research at all into the short-term rental space, primarily what you're going to see is information on rental arbitrage. And let's be clear, fantastic strategy, can work really well, but with
we
rents,
do it.
and we still do it to this day. But with rents starting to push up, not everywhere, but in a lot of major cities around North America, you know, I'm going to go on record saying that, you know, people that are 100% relying on that strategy are probably not going to be in the industry in the next 18 months.
Yeah.
Okay? And
they're really getting squeezed out right now because that's your margin right there, right? Remember, everything's getting passed on to the consumer. That's including rents, right? So rent is going up right now. And really, so there's two models here. I'll just make it simplified. There's the rental arbitrage model. So that's when you rent a property, let's say a condo for $2,000. You make $3,000 on Airbnb in that month. You net that difference to make it $1,000 in your pocket because $2,000 goes to the landlord. That's rental arbitrage. But with rents going up, that margin starts to go down, especially with consumers being very cautious on what they spend on, right? Like in the traveling market, people don't want to spend those higher, rental rates as well.
So the other alternative is what we're really actually focusing almost primarily on right now with the growth of our business is the partnership model. So how does that work exactly? Well, rather than, assuming a liability, which is essentially a monthly rent with a landlord, we essentially just make them a proposition to say, look, instead of us paying you a fixed monthly rent every month, what if we could actually help you significantly increase the amount of income that you're earning on this property? And the best part of all is you don't even have to do any of the work, because that's where we come into the picture. So we can run it as a profitable short-term rental on your behalf by managing it for you. Now, if you simply agreed to furnish the property and get it ready, then that's where we can kind of step in and, do everything we do and, help you increase your income without having to do any, further work on it, right?
This pretty much was, our idea that bred through the pandemic, right? Like we started out with rental arbitrage, and then through the pandemic, we really shifted our model to be this partnership model, because it really does protect your downside, like as a business owner, because if you're not paying for furnishings, you're not paying for utilities, you're not paying rent, you are literally providing a service. What is your downside? Other than reputational risk? Of course, you have to perform, and it's a win-win situation, but this is what we're primarily focusing on. And we always say just run the numbers, but this is a huge benefit, especially now with this kind of economy that we're going into.
Yeah, and I remember when you guys transitioned into that partnership model, it was initially more arbitrage heavy. Makes perfect sense right now. I mean, with all this uncertainty, the last thing you want to do is, sign your name, and obligate yourself to a 12-month lease, for example, that, heaven forbid, another, the pandemic comes back stronger than ever and people aren't traveling, they're holed up, and then you're on the hook for those payments. You guys, it can go south real fast. If you're obligating yourself to that partnership model, you get all of the benefits, obviously all the rewards of the model itself, without the obligation, without you putting yourself personally at financial risk if things were to, go down the tubes. Let's talk about the opportunity to make money, like you said, different revenue streams. So we always talk here on the channel about getting multiple revenue streams. If you are in that W-2 position, you could be in a very precarious position and maybe out of that W-2, in the near future. Guys, we don't know what's going to happen, but, there's a lot of rumblings that we're going to see unemployment start to go up or continue to go up and even start to spike, because of the economy. So, if you're in that, if you're not replaced or if you're not irreplaceable in your W-2 right now, or even if you are, I would be looking to diversify, having these multiple streams of income like they are offering. Guys, this is a business opportunity. So just like any biz op, there is going to be a cost associated with that. If you are interested, please stick through the end of the episode here because we're going to talk about the pricing. But if you know right now that you want to talk to Michael and Katrina and their team, go ahead and email BNB Bootcamp at VIPfinancialeducation.com. We'll drop that link below. Include your first, your last name, the best number to reach you, and BNB Bootcamp conversation in the subject line. Guys, this could be the opportunity you're looking for to either add to your W-2 income or ultimately replace it altogether. So have that conversation with them. They'll be sure to answer all your questions and again, see if it's a good fit. So what would you guys say to folks that are thinking about potentially getting involved in short-term rentals but are worried about the economy, the inflation, maybe some deflationary events right now, potentially the demand for short-term rentals going down? You guys have the finger on the pulse. What are your thoughts on that? Matthew and I have gone back and forth. I'm basically asking you guys this question on his behalf because every time we talk about it, he always asks me. I'm curious to see how you guys respond to that.
Yeah, and it's a really great question. And anyone that's sitting on the sidelines, I mean, the thing is, what we always talk to our students about is, it's really, especially as a business owner, it's very important to have a long-term mindset in everything that you're doing, because the reality is, look, you don't get the luxury to pick the exact right time to be in the market and participate in the economy anytime you so wish. It's like, I would love to get into the market in 2010, then get out at the top of 2020. It doesn't work that way, right?
Just like I did. That's exactly what I did.
Exactly.
We can't all be Michael Matthew, so.
Yeah, I mean, it's simple. Just look at the chart, dummy, right? It's obvious.
Right.
So, I mean, the thing is, look, you have to prepare for what any outcome that might be presented before you. And look, we operated our business through COVID, which, I mean, we had government mandated lockdowns where people were not allowed to leave their houses. So how do you run a short-term rental business when all that is going on? So, the reality is, look, recession doesn't mean the world is ending. It doesn't mean there's no economy still happening. It just means it's not growing as quickly or potentially shrinking just slightly from what it used to be. Right?
Yeah, a big thing we're, educating our students on, anyone that's in our program, don't be scared, but prepare. Right? Don't scare, but prepare. So it's you have to really change your position, be ready, be prepared, and let the numbers speak for itself. Yes, we're a short-term rental management company, but we're a mix of things. We do rental arbitrage, we do partnerships, and we run ownership as well. So when I'm looking at this opportunity, I'm excited and I'm preparing to get ready to even get into the market even more and purchase, because at this point, it is becoming a buyer's market. I'm super excited. It really depends on what you want to do and your goals, right? There's multiple ways to even utilize short-term rentals to get to your goal even faster.
Yeah. So, I mean, just in that outcome as well, I mean, part of it ultimately is when people say I'm running an Airbnb business, I kind of look at them funny. I'm like, well, what do you mean exactly?
Right. That's a booking platform.
Yeah. They're like, well, I have properties on Airbnb. And I said, okay, well, what if Airbnb decides one day they don't like you anymore and they kick you off the platform? And then, their face goes white and they're like, so it's so you're not it's like saying I'm a Yellow Pages business. Yeah, Airbnb is a platform where you can get guests to book your property, right? So what can you do? Well, don't just be on one platform. Okay. We've been advising all of our clients for a long time. You need to be multi-platform. You need to be omnipresent so that people can find you in multiple different traffic sources, right?
Yeah, really it's just building a solid, true business that's your own and making sure you take responsibility for that, right? Having direct bookings, you're building your own short-term rental business with loyal customers. So it's a little bit different of a look of just throwing it on a platform with grandma's furniture and getting some income. Those days are definitely, I would say, almost gone on Airbnb. So those people that came in during that rush, during, I would say, peak economy, they're getting wiped out because they didn't build their business on a solid foundation.
Yeah, and that's spot on, guys. And that's one of the things I loved about love about your guys' program is that you guys are laying that sturdy foundation. So regardless of what happens in the market, be prepared. So there's going to be an ebb and flow in real estate right now. You guys have an amazing way to get involved in it and get involved in STRs without having that capital outlay and minimizing and mitigating your risk that way. We talked about rent earlier. I want to kind of come back to that. So let's say there is an adjustment in property values. Let's say that rent rules start to drop. Are you guys beholden? I've not seen, personally, I've not seen your partnership contracts, but if I'm looking at getting involved, that would be something that would maybe be a question mark in my head. Are you stuck at those rates? Are you able to go back just based on market conditions and, I don't know if renegotiate, that might be the right word with the owner on title there to make it more of a, kind of a going rate as far as the ADR goes?
100%. I mean, ultimately, one of the things we've learned just being in business for ourselves and being in this industry is everything is negotiable, right?
Life is what you negotiate.
It's, there's a saying, life isn't always necessarily fair, but you get what you negotiate, right? So you would definitely want to have an awareness, like if you are doing rental arbitrage as an example, you want to have an awareness of what are other comparable properties renting for to what you currently are managing, right? So to your point, we actually went through this exercise not long ago because we do periodic financial reviews of our business because we're always trying to be as efficient as possible, right? Yeah. One of the things we realized on actually quite a number of our units in our area, rents were actually starting to decrease, some time ago. So what we did is we went back to the landlord and said, hey, look, I love the relationship that we have. We appreciate your business so much by allowing us to function with your property that, having this partnership together. But the reality is we've done some comparable research. We can see that there's literally units in the exact same building that are renting for this. We're paying that. I'm just hoping we can find some balance here and, maybe look at what we're currently paying.
Yeah. And then we lock in a longer term lease at the lower rate. This is essentially what it comes to.
Well, that's all about just following the data. I mean, you have to own your business. You have to go out there and do your own research, of course. And that's part of the platform you guys are showing these individuals through your course on how to go out there and utilize these tools, obviously, to operate their business. You guys are seeing, a solid decline in rent. You recognize that. That was the data point you guys saw. Then you went back to their partnership and renegotiated that. Your interests are obviously aligned there. If you're pie in the sky pricing as far as your ADR goes, your booking rates are obviously going to go down. Your occupancy is going to go down. So that's not in their interest. So that conversation is probably wasn't too technical. It probably wasn't too terribly difficult either, was it?
Not especially. It's just like, look, this is what other units are currently renting for. I mean, we'd love to keep the relationship that we have with you, but as a business, we do have to be mindful of our overhead in order to keep in business over the long term. So I'm just hoping we can come to some consensus here where we can maybe get a bit closer to what other units are renting for.
And we also lead with value. I mean, really, what's the value? You're professionally cleaning the place. Maintenance is on par. The place looks show home ready, right? If you just lead with that value alone, would a long-term renter do that? No, right? So just showing those benefits first and be like, we can continue this. It just has to be a win-win from both sides.
Now, to your earlier question, you'd asked of what happens if property values themselves start to come down, what kind of impacts would that might have? Well, I would say to that effect, it all depends on how you've positioned yourself financially in that. If you own property and you are doing STRs with properties that you own, if the values go down, you're probably going to lose money on paper, right? But again, if you have a long-term mindset and recognize that recessions don't mean forever, it's just a periodic slowdown that happens in the economy from time to time. If you can continue to rent the property out for more than what it costs you to hold it, well, then just continue to do that.
It's an asset at that point, right? And there's different ways to even utilize and increase margins. And that's exactly what we coach and train on. It's not just the nightly rate. There's so many other ways to even increase those margins from there too. So it's, it's being able to control your income again, just kind of coming back to that. It's like when you have an asset that's, higher than your costs, you're winning at that point.
Yeah.
Yeah, and to your point, so just a prime example in my world, we own our short-term rentals. So for me, it doesn't matter to me what happens with property values over the next couple of years, because again, it is a long-term play, and very, very seldomly. Now there may be small drops in rent or ADR, even if those property values do go down, but there's not an absolute direct correlation with the value of a property and what that ADR rate is going to be, obviously. So to me, like you said, it might be a paper loss, but if it's a 10-year play for me, we're going to have, 2 or 3 different cycles between now and then. So what are you guys talking to, your students about as far as being prepared based on the crazy economy? If there were to be a market crash, I think it's going to be a little bit more of a correction than obviously an '08 event. Again, I don't think anyone's predicting that, but how are you having your folks get prepared for that?
That's a really good question, because one of the things I've been very cognizant of as a business owner is what risks are we actually taking being in this industry. And the thing is, lately I've been seeing still quite a few ads of people telling folks, younger influencers that haven't been through these cycles, where all you got to do to have success in Airbnb is just load up on a bunch of credit cards that have 0 interest for a period of time, go rent a ton of apartments, and then you're going to be making all of a sudden $80,000 a month with little to no work. I'm not exaggerating. So
but that's an actual training course.
Yeah.
Yes.
So we might have to have them on.
Well, the thing is knowing our background, especially Michael, is like being in finance, used to be a currency trader. We're super like risk adverse, and we always in the back of your mind, you have to like mitigate your risk, right? Like that's always in there. So looking at loading up on credit cards, like we're like de-risking right now and like trying to get out of debt. And like, you have to start like getting out of your debt to be able to position yourself correctly.
Yeah. Cause ultimately, if interest rates continue to go up, which there's very good reasons to think that will likely continue for the foreseeable future. Well, if you're highly leveraged, that's going to be a bad deal for you, right? So people that are in our training, in our class, that are deciding to own properties to do short-term rentals, well, you might want to consider fixing your mortgages if you haven't already. Now, if you have properties that are on, adjustable rates, you might want to look at maybe paying those down a little bit more, right? So you're not as leveraged or not as exposed, right? Another thing we've been telling people a lot, when you go through these periods of consolidation or, pullbacks, having cash can be one of the most valuable things ever, because your cash actually becomes more valuable because it allows you to buy assets at a discount. Okay. So ultimately, what it really boils down to is you just need to be aware of what risk you're taking. And you want to make sure you're going through and actually doing a review of not only your business finances, but your personal finances as well. Like, where are you being inefficient? Maybe you have subscriptions that you're not actually using, but you're just getting charged monthly for. Maybe you need to actually go and renegotiate some contracts that could, yield you some savings there.
Yeah, it's just like essentially it comes down to your goals. What do you want to do? And then running the numbers. We call it the quote unquote millionaire math. It's just reverse engineering what you're looking for and what's the best strategy, right? If you're looking for ownership, what markets do you want to look at? Like you have to be very careful when you're starting to get into ownership, making sure those are correct short-term rental markets that you want to be going into, right? And there's a whole bunch of strategies that we teach. It's like you may want to test that market out first, and there's different tools. So it's not like a one size fits all. And that's why we coach. Yeah. Honestly, specifically, that's why we coach, to be able to guide someone through that process.
But for ourselves and our students, the final thing I would say is, for our business personally, we're not taking on like excessively expensive monthly leases right now. We're almost exclusively focusing on partnerships, because whether economy does well, whether it doesn't, whether property values go up or go down, it literally doesn't matter when you are in a partnership.
when you're doing a revenue share, right? And you're providing a service.
No, guys, so I think that's spot on. So there's one thing that you can't coach, though, and that's experience. You guys are obviously savvy pros here at this point. You guys are able to navigate an upcoming or a looming market that you might think have some, kind of hair on the dog, or some, some rough tides in it. And you guys are going in, obviously going eyes wide open, but you're going in feeling confident. And that's because you guys have experience that you're able to glean from. You guys went through the pandemic. So what are some of the challenges that you guys have gone through in the past? How did you identify them? How did you overcome them? And how are you guys using those experiences to guide you through, kind of troubled waters right now, if you will?
Yeah, that's a good question. And specifically in our market, how we've built our business over the last 3.5, almost 4 years now. In our specific area where we're at, we're in, Edmonton, Alberta, and that market specifically, it's actually never been that great over the last, I know everyone's like, oh, this big recession's coming now. And I'm like, our area, we lost a lot of our oil people in our area. And we actually crashed in a recession almost 5 years ago. So we've built our business in a recession, essentially within our specific market. So for us, we're quite confident because we're able to actually grow all throughout that. And then also the pandemic within it as well. So with that experience is being, I would say, flexible and just being like, honestly, being hands-on and just really looking and knowing the strategies to actually get the margins you need and to be able to make sure it works as a business, as a long-term sustainable business. So for us, I would say the biggest challenges was definitely our market in our specific area, because oil had pretty much left Alberta is essentially what happened. So that was our main industry. So that was our recession already. And so we had to figure out a way to like change that.
It's starting to come back now, but I mean,
now a recession. So which is interesting.
Yeah.
And COVID was really tough. When COVID hit, we lost $40,000 in bookings almost overnight. Mm-hmm. So that was a big hit when we had started, and just really being able to navigate through those times and making sure it was structured to have that risk mitigation.
Yeah. So, I mean, the biggest thing though is like whenever you're punched in the face or punched in the gut or something happens that's not to your expectation, which, by the way, if you're running any business of any kind,
it's going to happen.
It's going to happen, right?
Almost every day. Yeah. Right.
Yeah. Just be prepared for it to happen.
If it were easy, everyone would do it. We've talked about that.
So, I mean, what do? Well, you just take the next logical step forward and you just keep going, right? Because ultimately, the alternative is you can just simply quit. You can simply give up. And then, well, what's your alternative then? Well, then you got to go back to a reality that's probably not favorable to you right now, which for a lot of people watching this is probably working a job you don't like, working for someone you don't respect, or they don't respect you or treat you all that well.
You're going for $1 per hour again, you know, you're not controlling your income, you're over someone else, you know, you're working for the man.
Yeah. So, I mean, ultimately, like from our perspective, like we deal with lots of shit on a daily basis, weekly, monthly, whatever, but we don't take shit from anybody anymore. So that's the biggest thing.
That's the biggest difference, I would say. And honestly, probably one of the greatest like worries or challenges that you were mentioning. So definitely, I mean, the recession, we've already kind of been through one in our own market. Pandemic still kind of even going on, even though it's not going on. But probably another one, honestly, was just the running of running of the day-to-day. So we're currently at 44 listings, you know, and just being able to make it scalable. It is quite an active business strategy, but one of the challenges is making, you know, as we scale, the involvement of us being in it actually goes down. So that was an interesting challenge to figure out. And that's exactly what we found out with, you know, systems, team members, to actually make it passive. Because a lot of people say passive, but it's really just creating another job for themselves, right? But we wanted it to be truly passive without our involvement and growing and scaling without us. So that was probably one of the biggest challenges. And that's what we actually harnessed and really figured out. And that's what we put into our training to help others with as well.
Yeah, I think that's amazing. And when you go through things like that, you know, I'm a full-time entrepreneur. I'm 25 years at this point, and there's still going to be things that I haven't seen, but I've seen most, you know, even across multiple industries. And I've been punched in the gut, and I've gone through the pandemic, you know, and some other things. But I've always felt, and it sounds like you guys are the same way, when you come out of those things, you just feel so galvanized. It's like, all right, I made it through that. You know, what's next, right? And so when you have that kind of bring it on mentality, and I love the anecdote you guys said, you know, what was it? You get shit every day, or shit happens every day, but you don't take shit.
We deal with shit, but we don't take shit from anybody at this point.
Right. I'm going to steal that. I'm going to steal that from you. I'll give you full credit, of course. Guys, what's a parting shot that you could give us if someone is on the fence right now? They may be a little bit apprehensive about moving forward. You know, what would you say to them to maybe make them at least reach out to you and see if it's a good fit, but maybe make that leap of faith as well?
I would say to anyone that's currently watching this and has curiosity about how this all works, but maybe, you know, just there's those thoughts lingering in the back of their mind about, you know, what if this happens or that happens, or ultimately at the end of the day, like our philosophy on life and business and everything that we do, you are responsible for your results and your success or your failure, right? So it all depends on where you want to be in the next number of years here, because we're all riding two curves. We're either riding the success curve or the failure curve, okay? Choosing to do nothing is definitely a strategy, but I'll tell you, with everything that's coming at us at, you know, 100 miles an hour, it's probably not going to be the best way to get you to where you want to be.
Yeah, and one of the other things I would say as well is our best students that come through here are ones that are willing to take action and be coachable and trainable. And a big thing through this, like Michael said, is the responsibility of it. So when people even hop on a call with us being like kind of tire kickers or things like that, it's like, honestly, like you have to look at yourself in the mirror before you even have a discussion with us, because you have to be ready to change your life. Is essentially sometimes we say we're not even in the coaching or, mentorship business, we're in the transformation business, because what you're going to learn is something completely different. And if you're already there, you wouldn't even be having our coaching or training, right? But to really shorten that learning curve, training and coaching and having that one-on-one mentorship, that's what's going to move the needle. And that's what we've seen time and time again. And that's why we specifically coach to help that.
Because ultimately at the end of the day, every level that you get to in a business, we like to say every level has a new devil. Okay. There's always going to be different challenges. There's always going to be different obstacles that come, because the first thing is when you first start is you need to get the business going. You need to have money coming in the door, and then you need to survive for the next year or two and make sure you don't run out of cash. Once that's stable, you have consistency, then you need to leverage yourself out of that business so you can continue to grow and scale it. So that's a whole other challenge, because it's like now you have to reorient your actions and role in the company.
Yeah,
right?
and we have mentors ourselves, and I've never seen a different kind of opportunity to actually shorten that learning curve with it by doing it on my own. It's like if you're ready to go and you're ready to do it quicker, but in a safe environment and that known process, mentorship is definitely for you.
Yeah, definitely accelerating that process and not going along, learning from mistakes. It's just so valuable. I love the platform. Let's talk about the market in general, the STR. Where do you see the growth of that? Where do you see that in, say, 3 to 5 years?
So that's a really good question, because, I always like to say to our students that, predictions about the future are hard. And, I got 2 balls and neither one of them are crystal, right? So
you're on one today, aren't you?
I know.
But having said that,
using them all. You're using them all.
Yeah. Based on our experience and just different things we're seeing kind of shifting around in the industry in general, there's a couple of things I think people need to be cognizant of, but it's also going to create, huge opportunities for those that are present and, ready to take the action to take advantage of it, right? So the first thing I definitely think we're going to continue to see more of is there's going to be more regulation. There's going to be more, compliance coming in, especially in like larger metropolitan areas, which could make STRs a little bit more challenging in specific markets. But that doesn't mean that STR is going away. Like, it's here to stay. We all know that. Like, the consumer has voted with their wallet, and they are going to continue booking short-term rentals for decades. Okay. So we know it's not going away. But as far as other things, we're being cognizant of, Airbnb is a fantastic platform. It is still the juggernaut of the industry, but there are definitely some legitimate bigger competitors coming that could pose a threat to its dominance in the market. And the one that I would think a lot of people are not talking about at all, Google is actually launching their own vacation rental platform. In fact, it's already here. It's just
already here, actually.
it's actually not talked about really all that much. But look, Google's the biggest search engine in the entire world. There's no reason to think that's going to change anytime soon. So again, it comes down to how you are positioning yourself. Where are you getting your traffic from? Where are you getting your clients from? How are you marketing to those people? And how do you keep your places full, whether we have a boom, a bust, or anything in between, right? So ultimately, that's kind of what we're seeing. But and my thoughts are like we're seeing some big players come in as well. Like, I know Marriott is coming in with short-term rentals. Like, some of these big players like of hotel chains are coming into the short-term rental industry. And so again, position yourself as a business, as a professional to be able to even compete. That's going to be huge, right? Especially when you got that kind of funding coming in. So I think there's going to be, like I said, Michael says it's here to stay. I 100% agree. It's just making sure you're positioning yourself to take advantage of that, right? And not getting wiped out. Yeah. Ultimately, if you're coming into the space now, you got to have a clear strategy of what you're doing right from the very beginning. Because just simply throwing up any listing on any property and you're thinking that's just going to land you tens of thousands of dollars a month, there's expectations and then there's reality, as they say, right? So put the odds in your favors, guys. Like, take that responsibility for your own business. And why wouldn't you want the best success to actually get your business on the right footing?
Yeah, no, I 100% agree with you guys as far as the growth trajectory of STRs over the next 3 to 5 years. Give you a prime, like Orlando, for example, where we're pretty heavy in the Disney STR space. there's 65,000, I mean, purpose-built vacation homes in Disney alone. They're not just going to go away. So I agree with you guys. I think it's just going to be upward growth all the way here. So guys, if you're on the fence, it's at least worth a phone call with Michael and Katrina and their team. You may ultimately decide to take action with them, and we're going to be very happy for you because the folks that we've talked to have come back with just rave reviews. That's why we're going to keep bringing them back here on the channel if you guys are willing.
We would love it. And we love having these discussions and being open about it. For us, it's just, you know, if someone wants an honest conversation, we're definitely open to talking with anyone and just seeing if it's right fit, because that's huge for us, because we just want to make sure that alignment is there and making sure this is the right program for you to get to your goals.
But I would say, yeah, to anyone that's, you know, kind of on the sidelines, it's just, again, you got to look at yourself in the mirror and just ask yourself, like, where do I want to be in the foreseeable future? Where do I want to take my income? How do I want to grow my wealth? Is what I'm doing right now going to get me to where I want to be?
Yeah. It's like, what am I going to do about it? Really, it comes down to that.
And if the answer to that question is no, or you don't know, or you're not sure, you may want to start looking into what options are available. Because like we always say, there's a million ways to make $1 million, right? Mm-hmm. Short-term rentals is just a vehicle that can do that, and can, with, I'd say, with a high degree of predictability, that can do that for you. It's just a question of, do you want to participate? Like a lot of other people have that have done extremely well. And we can definitely help with that process. But, you know, happy to talk with anyone that wants to reach out, have the conversation, and, you know, we'll be very upfront, transparent. You know, we'll probably be the first ones to tell you if it's not a good fit.
Yeah.
So.
Yeah, I like that, guys. It's at least worth a conversation. If you're interested, you can email BNB Bootcamp at VIPfinancialeducation.com. We'll drop that link below. Include your first, your last name, the best number to reach you, and BNB Bootcamp conversation in the subject line. Guys, I asked you before the video here if there's something that you would be willing to do for our channel. You guys have done this a couple times. We always appreciate it. We know that this is a program that you guys typically sell for $12,000. You guys have been gracious enough for our audience to lower that price to $99.95. And it's my understanding that you guys are doing all of the coaching yourselves at this point. You guys are transitioning back into that. So love that you guys are as hands-on again. The people that are going to be in your classes are certainly going to reap the benefits of that. You guys are maxing your classes out at 10 per month, though. Is that my understanding correct?
That's correct. Yeah. So the reason why the students that come through get a very high degree of success is because we do cap the enrollment, because ultimately, in order to provide the hands-on, you know, direct, you know, FaceTime with, you know, ourselves and the student, you just really can't do that in an environment where there's dozens or hundreds of people on, you know, a call at any given time. So we do only accept 10 people per class. And once they're full, right? So we are opening up enrollment again for the next, you know, class that we're going to be opening. So again, if this sounds of interest to you, you want to get yourself in a position where you can have more control over your income, just send us an email to bnbbootcamp at VIPfinancialeducation.com. And, you know, we're more than happy to have that discussion with you to see if it's a good fit.
And guys, don't be scared off by the sticker price there. You guys do have funding options if they do not have the full amount. Is that correct?
Correct. Yeah. So if there's any concerns about, you know, the tuition amount, we do have a number of options that we can discuss on that call, just to provide, you know, the most viable option of what's going to work best for your financial situation.
All right. Fantastic. Well, love having you guys on. Check them out. See you on the next video. Take care.